bullish call on Facebook today ahead of its own earnings after the bell upgraded to strong buy from outperform Raymond James. Price target goes to 270. Obviously, they're looking for strong earnings. Pete, you own Facebook.
Yep, I own the stock and I own the calls, and I'm doubled up because of the fact that I think this name still remains very cheap. I mean, we talked about just a little while ago, we were talking about valuations. This is a name, because of the amount of growth that they've got and the cash flows that they've got right now, remains very inexpensive in my opinion. And you look at all the various verticals where they continue to grow faster and faster and faster. Instagram and some of the rest of them, WhatsApp, Messenger, all of these various things, they've got to do a better job of monetizing in some of those areas, and I think that they will. But everybody was supposedly going to be leaving Facebook because of security reasons and all the rest of that. Never happened. So when you look at this company still, you look at a company that's being really well run, I think efficiently managed, and the amount of money that they're making, the cash flows that they've got are absolutely extraordinary every single quarter. I expect it to be a very, very promising delivery tonight and they've remained in the political scene, right? I mean, so we do know that there's something there that where others maybe have left, they're picking up the scraps.
Let's assume that it is, just for argument's sake, okay? They deliver, all right? And they deliver well.
Yep.
But I go back to what Amy said about Apple, and which I thought was a great point. Do you need to temper your own expectations now about where these stocks can legitimately go because they've come so far, despite how good their earnings may be? You see it with Apple, only 3%, I don't know. Microsoft's run a lot too. Facebook's up better than 50% over a year.
The Facebook story has been, in my view, about Instagram and about the pricing power that Instagram has given them with digital advertising. I think that story is early. Now, if we see a moderation in that growth, then yes, there's reason to be concerned. I would say Facebook, relative to Apple, with your concern, I would say Apple is a little bit deeper, further along in terms of its price appreciation. I'd be more concerned about Apple than I would with Facebook.
It leads into whether, some of these stocks are a buy into the numbers, even if you're a mega bull, because you wonder about what the jumps could actually be given where they've come from.
I really don't like that strategy, guessing on a quarter. I like to take a longer term view. Take a look at Apple. You couldn't have predicted that great a quarter. It's up 3%. Whereas if they miss, that stock's down 10% or more. So the risk reward just doesn't make sense on that side.
Okay.